हाँ मतलब वरुण पीता है देवयानी खाती है टाइप.
Wow.
That-
That was not an insinuation to anything.
Disclaimer, none of this is investment advice. For actual investment advice, go to rupeeting.com. This is just educational / entertainment content. And let's start. So today's topic, I think last week, which we pitched something related to energy drinks, is Varun Beverages. If you have ever heard of the brand names Pepsi, 7 Up, Miranda, Mountain Dew, Nimbus, Slice, Gatorade, Aquafina, all of them are distributed and manufactured by one company in India, that is Varun Beverages. So if you can tell us a bit more about that, Sagar.
Oh me. So Varun has got franchisee, the master franchisee for Pepsi. So what it essentially does is it manufactures, bottles, and distributes all of Pepsi's beverages all across the country. Usually, all the beverage companies have been operating this way ever since. Right from when Coca-Cola entered in the Indian market to then Pepsi's entry. Because they don't have distribution in India, they don't really have the prowess to, as international companies set up the entire network, they usually tie up with local distributors so that their product is spread across into the market. Very interestingly, RJ Corp initially started off with distributing Coke. So it started with bottling Coke, and Coke exited the Indian market. There was a time when they had entered, they found it difficult to operate. They exited the market, and RJ shifted to. RJ Corp is, by the way, the holding company for Varun Beverages, and RJ Corp shifted to bottling Thumbs Up after that. And after Thumbs Up, when Pepsi announced its entry into India, is when they realized that, hey, this is a massive international player who's coming into India, which is worth backing. And that's when they said, fuck off to, sorry.
You beat that out.
Yeah, that's when they ditched Thumbs Up and moved on to Pepsi. And obviously their story since has been unstoppable. So they obviously were one of the distributors and bottling companies for Pepsi, but now they manage about 90% of Pepsi's operations in India. So that's where Varun Beverages is at. Yeah. And so RJ Corp is not only involved in beverages, they do other stuff as well. Ayush, you want to take over and talk about the spread of RJ?
So apart from owning a bottling company that's affiliated with Pepsi, they have another entity which is a subsidiary of theirs called Devyani International, which owns a lot of food, or rather fast food brands. Some of them being Yash and Hardik, inputs and names.
KFC, Pizza Hut, I think. One more.
Domino's.
Costa Coffee, recently they acquired.
Costa.
Yeah.
So there is that spread that they have in terms of encapsulating a lot of F&B under their purview, and they seem to have a good hold of the brands under their parentage.
I think interesting
All of them
fact
seem to
here
be
is
doing well.
that. Sorry.
Interesting fact.
There was a lag, that's why. If you look at KFC, Pizza Hut, and Taco Bell, they were originally spun off from PepsiCo into Yum Brands, and the company that manufactures Pepsi in India is the same which is related to Yum Brands. So Devyani, which you talked about.
That is interesting.
So it was
You
kind
want
of
another interesting fact?
Yes, they are all here.
So RJ Corp, the parent company, is named after
Ravi
the head
Jaipuria.
of the business, Ravi
Oh,
Jaipuriya.
yeah, I know this very.
Was that the question?
Varun,
Oh.
no,
It's
there's
his
no
son.
question. There's an interesting fact.
Oh,
Yeah,
Nothing
yeah.
else.
Acha.
Varun is the son and Devyani is his daughter.
Is the daughter, yeah.
Oh wow.
Let's go.
I think they're both each whole-time directors for each of those specific companies named after them.
हाँ मतलब वरुण पीता है देवयानी खाती है type.
Wow. That was not an insinuation to anything.
Yeah.
So when we use the word parentage for the companies, it's kind of like in the family. It's
Really parentage, yeah.
goes well.
The thing is,
Yeah.
we needed a third company, फूकने के लिए.
Again, we do not support or condone this activity.
I think the ITC bit has been covered already.
Yeah.
Go check out our last video on ITC. Okay, so back to speaking about beverages and VBL's mastery in being able to capture more of PepsiCo India's business over the past 5 years. So in general, I think the soft drink industry in India is pretty small when taken in a global comparison, but that has been growing with just cola consumption growing at almost a 15% CAGR in the past 5 years. But still, that's pretty small in terms of its size. And that size is also switching. So now people are consuming less carbonated soft drinks than they were in the year 2017, which that revenue mix in the industry went from 57% to now 52%. And that is being taken over by healthier options. So there are your juices, your water brands, your low sugar or no sugar carbonated drinks, and even energy and sports drinks comes in that bracket. So along with that transition in the industry, VBL has also been switching up their game. Wherein although their carbonated soft drinks segment has done extremely well and will probably continue to do so in some capacity, their product mix is switching more to a healthier and more socially assistive product mix, with a lot of their products being Tropicana juice, Sting, which is an energy drink that's in low sugar. They've recently acquired a dairy company, not acquired, but rather taken up the licensing from their sister company, Devyani, which is Cream Bell, and will be sister companies. That sounds awfully weird.
Sisters screaming the brother.
Oh
Lot
no!
of corporate entanglements going on.
Corporate incest.
Oh yeah.
Why? Just came out and say
Hope we
it.
don't get sued by anyone related to RJ next week.
No.
Damn, at
I'm
least we'll get
doubtful
views that
anyone-
way.
Coming back to the topic, yeah. So Cream Bell was the actual name of the dairy company, and they'll be selling milkshakes under that brand name through VBL. And that's just some of the products that they have in their health conscious section. Now, Hardik, can you tell us why? So I mentioned that their carbonated soft drinks section will continue to do well, or rather has done
Yeah.
exceptionally well in the past 5 years. So can you just give us a lowdown on that?
All right. So, carbonated soft drinks have usually done well in India because penetration is comparatively very low compared to international markets. One interesting trend there is, in fact, ki internationally the consumption of obviously carbonated beverages all over the world is going down, but internationally it's like reducing. India mein it's increasing at a decreasing rate, but it won't like decrease बहुत ज़्यादा also क्योंकि India में there is
One sec. Wait.
yeah.
There's too
So
much
do we-
decrease.
Sorry. I wanted to say, acha, theek hai, let's
So,
restart this bit.
one second.
Yes,
So, carbonated soft drinks, the consumption has been increasing because India is an underpenetrated market. We consume roughly 44 liters on an annual basis of non-alcoholic beverages, most of it which is carbonated soft drinks. And still, given the fact that affordability has been low so far and penetration has been low and the cool factor is still intact, the penetration for CSDs has been increasing. However, people are also getting health conscious, but at a faster rate than they want to be cool. So the growth rate for drinks like juices, dairy beverages, etc., has been faster than the growth rate for cola. So while cola is growing at 10% or is expected to grow at a 10%, the other beverages will grow at a 20% CAGR over the next 5 years. So cola is an attractive market. It is a growing market, but it's a reducing pie in the overall portfolio for the beverage industry as well as for PepsiCo and hence for Varun Beverages.
Right.
True that.
So that's
true
on
that.
what
It
they're
will remain a
going to be doing.
significantly.
Right.
Yeah. So other than the growth in cola, there have been a couple of more factors which have been especially beneficial for Varun, right? You want to highlight those in terms of how Pepsi's association with Varun has resulted in a market which is growing at 10% CAGR. But for Varun, the growth has been 18% CAGR over the last 5 years in the cola business. So what's resulted in the higher growth for Varun?
All right, so I'll take that up. So higher growth for Varun basically is from 2-3 different factors. One is the deeper penetration, obviously. Second thing, they recently acquired the southern and western businesses from PepsiCo, which were before run by PepsiCo separately. So Varun got those businesses, took them over, got better penetration than Pepsi had achieved before. And hence their sales, I think in FY 2022 grew almost 50%. So yeah, it's a regional add-in that has helped Varun a lot.
Right. But it's also interesting how Pepsi's dependence on Varun has increased all the way from, say, 45% 5 years back to 90% now.
Right.
And it's quite symbiotic a relationship and quite counterintuitive if you think of it, because like from the outside view, it doesn't make sense. Why does Pepsi have to depend so much on someone like a Varun Beverages, right? But I think the whole idea comes from the fact that Pepsi, their focus is on making the concentrate, their focus is on branding, their focus is on marketing and spreading the word about how Pepsi is the best, etc. Whereas the efforts on production, on supply chain, on distribution, and all of those things which come to execution of the strategy can be outsourced to somebody for an entire geography. And that works beautifully because they keep getting a royalty from the sales, and they've also passed on sales to somebody who's much more efficient, who knows the country better, who's able to operate at a much better efficiency compared to Pepsi would have.
Definitely, yeah.
So over the span of, I think, 30 years that VBL has been in association with Pepsi, so going from almost nothing to now 90% of their beverage business, and plus now getting into their chips and all of that. So VBL is penetrating not just in the market, but with its own supplier.
Sorry, Varun Beverages has been existing for 30 years.
Yeah.
1995, yeah. They started.
That's not 30.
That's not 30 years. No. More than that.
Yeah.
Sagar,
I start calculating when I'm born and I start calculating the age. There is a guy named Varun who owns 90% of Pepsi's business, and Sagar Lele is sitting here talking about him not achieved anything.
Moving on, guys.
Sagar thought we'd come to his rescue and give him a pep talk.
No, it's okay. I'll just buy his shares and make money.
That's true.
Oh my God.
He can take the effort.
I think, speaking of that, our SRI portfolio had a bit of VBL stock.
He does the worst brand plugging.
It is so unsubtle. Speaking of that,
It was a natural segue, guys.
Very, very natural.
But
you were saying.
Yeah, so I think Varun Beverages has been in the portfolio for how long? 9 months now, and we've made 70% of that investment in our SRI. Now, why SRI stands for socially responsible
70% return.
Return only, I said.
Oh, okay. Sorry.
So why? I mean, SRI stands for socially responsible investing, and that portfolio basically invests in companies that have an ESG angle, which is environment, social, and governance. And why Varun Beverages qualifies for that argument is they're very into recycling and reduction of water wastage. In fact, recently they've recycled up to 80% of all of their plastic bottles that they
Produce,
sell
yeah.
out. Yeah, and that aim is going to go up to 100% in the next few years. So that's their environment helping section. Social is the fact that they're switching to healthier options for their consumers, so they're not killing them with diabetes, rather trying to save. And yeah, that pretty much includes them in the theme for
Qualifies
SRI.
them for the SRI, yeah.
Right.
Yeah, but the differentiating factor about our SRI portfolios is that we don't only focus on ESG, but we also don't lose sight of the fact that money needs to be made, and at the end of it, it's an investing product. So we are a perfect blend of ESG and alpha creation. And while ESG factors fit in well for Varun Beverages, it's also given us stellar 75% return over the 9 months, last 9 months, which makes it a good fit for the portfolio. There will be a button to buy here. And a discount code here.
Yes.
Apart from carbonated drinks, they are also looking to diversify into the dairy market, which seems very untapped by these traditional beverage players. So, can you tell us a bit about that?
So right now the competition is minimal, in which case I think there's only Amul, Cavins, and I think Go that has this particular price point and variant of a ice cream milkshake combination. And the dairy beverage market seems to be the place to be when you don't want to have
just
a
an addition there.
Yeah.
I think the underlying factor also is that these drinks are temperature agnostic.
Ambient temperature.
They don't necessarily have to always be stored in the cold. They come in Tetra packs like an Amul, right? Otherwise, Amul is a dairy beverage. It is a milk product which is available so widely, but that doesn't fit the competition because you can't really take an Amul Cool bottle and roam around.
Right. So this is particularly impressive in that setting also, that it doesn't need the cooling infrastructure to store it. So this can be expanded to a much wider subset of distribution as compared to a soft drink which needs refrigeration all the time. That's an interesting one.
And it's also helped by the fact that like VBL already has a lot of visi-coolers and outlets under its name. So any product that it wants to get out, it can get out at a large scale very quickly. You were saying something.
The dairy, as Hardik pointed out, the dairy distribution with Amul is quite limited. But you see Pepsi or let's say slice coolers everywhere in the country. So having that distribution ready to go for their dairy beverages, that is really beneficial. Although products might exist, the penetration is not that deep in the country for them. Yeah.
So time to market and coverage becomes an easier job for someone like a Varun. And you've got a lot of evidence of that happening from Sting. So right from launch in 2019, all the way to how it's performing right now, they've been able to leverage their existing network and their existing tie-ups and partnerships with distributors and existing production facilities as well. To propel sales. You want to talk a little about the numbers of how Sting has performed from being nowhere. I mean, it wasn't existent before 2019, but now being such a strong brand.
So I think from its entry into the affordable energy drink market, in which it is a pioneer, because it's priced at 20 rupees for a 200 ml bottle, which prices it exactly like any other Pepsi bottle, but an equivalent Red Bull perhaps would be not just double the sugar, but it'll be 6 times the price. So it very conveniently caught that untapped market and penetrated it to an extent where it now makes up 11% of sales volumes of India from VBL, which may go up to 15%.
That's for 2022.
That's for 2022, yeah.
But the last quarter, it was at 15%.
15%.
16%.
16,
Actually.
yeah.
Right.
So
And that was the
clearly
highest during the entire year.
growth is upping, right?
Right. Yeah.
The average for the year is 11 or 10 or whatever, but
Correct.
16 is the run rate.
They don't even have Sting in all their own coolers yet. So I think it's like only 40% coverage in their own coolers they have yet. So it has like massive room to grow. And Sting's growth secret, I think it's little bit about that. It's not only taking market share from the energy drink segment. It's also taking from the low 20 rupees segment. It has taken a big market share in that also.
Yeah. Simply because of the two propositions, right? It's cheap and it has much less sugar. So it panders to the audience that wants to have that health aspect while also sipping on something fizzy and caffeinated. Yeah.
And filled with taurine.
Yes. Da, 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 da.
I think there has been not much
Okay, so
in this category, so that's also a reason customers are looking for new products, and they responded well to this play-by.
Right.
also because the energy market is so expensive, right? Even Gatorade is an expensive product. It has always been premium. So this is like the boat of energy drinks.
Yeah.
Suddenly you've got a mass market product, and this is a product which has been meant for affluence, and suddenly comes down to mass market, and everybody resonates with the brand very well, and they consume it. So that's what's working really well even for Sting.
Yeah.
That's a lot of caffeine, though. It's a lot of caffeine. Like it has, I think it's suggested you can't drink more than 2 bottles a day. I don't know if I should say this.
Wasn't there a news clipping recently of someone who had more and faced the consequences?
14-year-old kid drank 4 bottles and died.
Not a laughing matter, Hardik.
Is it like real news or is this from what?
Sorry?
No, it's real. Actually, yeah.
No, I mean, there have been a lot of cases, like even internationally, where people drink a lot of Red Bull and die. But they're usually mixing it with Jägermeister. I don't know what this kid was doing.
So the energy drink kills them first before the liver cirrhosis.
No, so it's like a conflicting thing, right? Energy drinks give you the energy and are pumping you up, whereas alcohol is reducing your activity levels.
Oh God.
And your body is just in a mess. It's like, what the fuck are you pouring into me, man? And it finally gives up.
So this is a public service announcement from Rupeeting. Jaeger shots can kill you.
Yeah, it's very Jaeger shots are okay. Jaeger bombs are not okay.
Bombs are the problem,
Yeah.
Yeah.
So stop spending $1,000 on Jaeger bombs. Buy a Jägermeister and chuck that instead.
Yeah.
This is going
Saturday
to be
night, yeah. I mean, we have podcast.
There's going to be delivery
Saga
by
and Ayush, I think.
sometime, yeah.
What?
Sagar is sending a bottle to each one of us in some time.
Is there a problem with the audio?
I think there's a little bit of a lag. I think there's a little bit. Yeah, but coming back to our VBL topic,
Yes.
Sting did really well. And in their other arsenal of products, which is their juices and water and everything, they have like a 24% market share now after VBL got the rights for actually distributing Tropicana and Slice and everything like that. So they're number 2 in terms of singular products, but as a total whole, they govern the largest market share in the juices and nectars segment of India. So all of this together, they've sold around 802 million cases in the whole calendar year of 2022.
No, so sorry, 650 million in India. So let's stick with that figure.
So 65 crore in India, and that's quite the jump from the previous year by around 40-50%. We count off at
So
100.
do you know how much one case is?
It is, I know this way, 24 bottles, 237 ml bottle each. Is
Chal,
that correct?
mental math. Whoever gets this the fastest. Mental math, huh? Yes,
I
pay
give
attention.
up. Give up on
What?
it.
What? Yash, Yash, pay attention. He's like, fuck off. I'm not here.
Everyone has given up.
What mental math क्या करना था पर?
We'll
The
come back and tell you.
liters, the liters
5,
of
6, 8, 8. ML.
Like,
ML,
interestingly,
na?
but
Arey.
that was not my question. But
But what is
then?
your question?
let Yash come back now. I'll tell you.
It's not coming back. Hello. Can you guys hear me?
Yeah.
Yeah.
Yeah, you're audible. I think the video will correct itself in the.
No, the recording is happening, so ignore me.
Huh. Ignore me.
Yeah. Yash needs Devyani's help.
So I was reading one of RJ Corp's, matlab, RJ's interviews. So it's very interesting that the family is vegetarian. Okay. And when he started or got the franchise for KFC, his father was very disappointed. He was like, how can you sell like non-veg and stuff like that? But RJ was like, dhanda's dhanda, bro. So he
That's
continued
true.
doing
Mad
it.
lad.
And yeah, but he did pretty well. Yeah. And
Obviously.
he's also right about the bet, right? Because like everybody, whether it is McDonald's or Pizza Hut or whatever, they all have competition, but KFC is the sole player in the segment.
Right.
There's no
But it's
chicken,
changing now.
like fried chicken player. What?
No, with Popeyes entering Jubilant, I think they've opened a few stores this year.
Who cares about Popeyes? Who's seen a Popeyes and eaten at Popeyes?
KFC is a well-known brand, I guess. But all the other people are like cutting into its market share now. So everybody started with chicken.
Yeah, but like KFC is KFC, right? Like if you
True
want
that, yeah.
chicken
It's
popcorn, you want chicken popcorn, right? And you want it from KFC.
Sagar seems like a fan.
I wouldn't settle for anything else other than KFC chicken popcorn. Where were we?
100 crore case is as
Yeah,
their
so 100 crore
mark.
cases is the target. And they've done 65 crore cases last year. Obviously, half of it is carbonated drinks, which has been growing at 18%, but the levers for that growth are certainly off now because its penetration within Pepsi has reached its upper limit. So it will now start growing at market rates rather than higher than market rate. So that will clearly come off or moderate. But all its other segments, whether it is juices, bottled water, let's focus on these two specifically for now, juices and bottled water. Both have been growing at a 33% CAGR over the last 5 years. Clearly much higher growth compared to the high growth of CSDs. And with that growth tapering off, a majority of incremental growth will come from or continue to come from juices as well as bottled water. Additionally, while that is 33% growth or whatever, they've created Sting, which is growing in multiples. It's not growing in percentages. Ow.
What?
Ears are bleeding.
What happened?
Yeah.
I think because you moved the laptop, the
Oh,
mic
sorry.
took the brunt of it.
Oh,
No, chill.
Yeah. So, and Sting is growing in multiples and not in percentages on top of that. And the potential for growth over the next few years will be added by Cream Bell, which also has the potential to grow in multiples. So it's very likely that instead of achieving 100 crore cases by 2025, they'll actually achieve 110 crore cases by 2025. If you just project numbers basis what has been the historical trend, their current product lineup, and the amount of effort they're putting into the new products. So rather than a 15% CAGR in sales volume over the next 3 years, what can really happen realistically is a 20% CAGR over the next 3 years. Right. Now, how does that translate into when it comes to financials, especially? Let's just stick to revenue growth and earnings growth. 20% sales CAGR over the next, volume CAGR over the next 3 years. Hardik.
20% volume CAGR over the next 3 years. I don't know what is, matlab, I don't know what you asked exactly.
Hardik, keep up.
You said so many numbers. I lost it.
Never mind. So basically, over the next 3 years, the company can achieve about a 23% revenue CAGR and about a 40% earnings CAGR. Right? And that margin expansion is coming from adding higher value products. So as they move away from cola and add products that are higher priced or higher value, the realization overall increases and aids both revenue growth as well as margins. Increasingly, the more products they sell with the same network, the higher operational efficiencies they gain, and hence their margins see improvement there as well. So over the next 3 years, they can clock a 40% CAGR in earnings, which is the same as what they've clocked over the last 5 years. So effectively, despite not having any acquisitions like they did in the last couple of years, they're still displaying the potential to maintain growth rates on an organic basis, which is commendable and which leads to a place where the stock can do really well. Right? You want to talk a little about how the stock has performed so far, and given that the growth will continue, how it will probably perform in the future?
So I think in the past 5 years, it's given a 7x or 7x return to its investors, which is phenomenal considering what kind of drivers they've had. And I think in terms of what their future projection looks like, they could be able to give a better inclination to its valuation and what we're expecting.
All right. So at least when it comes to the valuation, we have valued it at a P of 40x over the 2024 expected earnings, like a peg of 1x. So, like simply talking about the potential for the stock, our target price is around 1800. So the potential is, there is a huge upside of around 33% from the current market price of $1,350 around. So there are, as we have talked about all the growth levers for VBL, taking that into consideration and then giving it a little bit of discount, as it technically doesn't own the Pepsi brand. It has to pay a certain amount to Pepsi every year from its sales. So yeah, that's how
So
the
the
valuation.
discount primarily stems from the fact that, one, they don't own the brand, so there's a risk that that license goes away or the franchise goes away, and number two, that no, only one. So sorry. So despite having higher growth compared to, no, sorry, number two, I had a number two. So number two being the fact that because they have to pay royalty or whatever, their margins become thinner compared to their competitors. So peers will ideally trade at a higher margin, generate a better return on equity compared to this guy. And hence there is a discount despite the growth being at least 1.5 to 2x of what peers are exhibiting. But how much of a risk is there in terms of this license going away?
I think
because there's so much dependence on Pepsi.
So the thing is, there is VBL and Pepsi management have great relationships. Like we have established that so far. There are a lot of things indicating that they got the license for Tropicana. Like first time in the world, nobody else has got it. So that is one thing. Second thing, they have the longest standing contract with Pepsi of any available distributors in the world, which is like, I think valid till 2039. So yeah, the only little bit of negative point I think we can see is the contract can be cancelled over a notice period of 1 year. So very unlikely to happen, but it's there.
Yeah, I think it hurts Pepsi as well, right? So if they terminate the contract, Varun will be like, "Haan, khud baat kya abhi?" And these guys will be like, They have no
True.
network, right?
Yeah.
So they'll have to either tie up with a lot of people who've got an equivalent network, or do it themselves. Both of which are situations which are unaffordable from a Pepsi standpoint as well. And especially given the fact that Pepsi's anyway got like a third of the market share when Coke is at 50%. So it's anyway lagging in India when it comes to market share. And in a situation where competition is also getting stiffer because you've got Thumbs Up picking up again, it's at its highest market share ever. And you've also at the same time got Reliance investing in Campa Cola and trying to revive that brand. So the cola market seems to be, although moderating, there seems to be a place where people are going to fight it out for market share in the future.
Definitely.
In
Like
fact,
talking
as you
about
mentioned, even with Thumbs Up, they have also launched a direct competitor to Sting, which is called Thumbs Up Charged,
charged.
and it released last year, which is at the direct same price point, same offering of less sugar at that affordable range. So we'll get to see Sting facing some sort of competition in its own field for the first time, and
It
how
tastes
VBL
very
is going
bad.
to count.
So
Oh, you've tried it? Sting or Thumbs Up Charged?
Sting, always Sting is way better. Thumbs Up charge is horrible.
Oh, really?
It tastes horrible, at least I know that. Tried it only once. Never drank it again. No, but yeah, talking about like VBL management, it's very beneficial for Pepsi because kind of VBL has now expertise in managing emerging markets car distribution. So they are trying to give VBL even more business. So as we have seen from the trend in Morocco, they have given distribution rights to VBL for I think Lay's, Cheetos, and something else,
Doritos.
food products. So currently they are
Doritos.
Doritos. So currently they are not manufacturing. They are, I think, importing from Portugal and Egypt. Not sure which one, but yeah, they are African countries. All of the emerging countries, VBL has huge potential of distribution rights from Pepsi's over there. So yeah, we could have potential more like Indian markets. Similar thing happening there.
Yeah, so 5 countries overall, other than India, where Varun's got rights to distribute Pepsi products. But I think also the exciting part comes in where, although they are 90% penetrated when it comes to Pepsi's beverages, there is a whole food segment which also Pepsi is so successful at, with Lay's and with Kurkure and so many brands that are doing so well. And Varun's got no exposure to it. Other than now, they set up their first
Yeah.
factory to manufacture Kurkure,
Right.
which also
Yeah.
opens the door for them in the food segment,
Yes.
which is quite
Won't be
exciting. So there's
beverages anymore then.
No,
yeah,
no. So
Varun सिर्फ
it's
पीता नहीं खाता भी है.
technically they don't distribute it. They are only producing it for Pepsi. But that's
Yeah, well, they're doing something for it. So
Yeah. Although the
yeah,
management has indicated that there's no such plan yet, but I mean they
they
could
are
just spring
definitely
up at
setting
any
up
point.
more production lines. So there is demand for sure. And VBL is better at distribution anyway. So in future it is most likely to come to them only.
yeah. So there's too many opportunities, right? To like
Yeah.
structure it a little bit. There is cola, which anyway is seeing, say, GDP like growth or GDP plus something growth at say 7 to 9% or whatever. But other than that, you've got new products like Sting and Cream Bell, which are growing in multiples, even at a base which is high enough now, at least for Sting. And then you've got juices and water, which are doing extremely well, growing in double digits. So the entire beverage portfolio is doing amazingly well in India, very likely to reach more than 110 crore. And then you've got 5 international markets which are growing even higher than India. And then you've got doors opening up into the whole edible, sorry, not edible, the edible market,
Packaged food.
the packaged food market.
Yeah.
Yeah, Varun's become a dealer suddenly. Yeah, like bro, munchies, like imagine. No, sorry.
We do not condone
Oh my god.
substance usage.
Sell edibles and then sell munchies as well.
Oh god.
And you've taken care of thirst as well.
Oh shit, yeah.
Even like
Yeah.
the soft drink segment, it has better prospects than other competitors in FMCG because they are already all penetrated. So India, talking about India in the soft drink market, it's not technically soft drink market, it's cold drink market. So if you don't have a refrigerator, you can't sell like cold drinks or soft drinks there. So the electrification drive that the government is going on with. So as that progresses faster and faster, VBL has more area for penetration, like which is not available to the other FMCG market. Yes.
Sorry.
Yeah.
Yeah.
All right.
So Yash, do you have any questions?
Yeah. Actually, so I think there is no other major bottling partner that maybe that could be replaced with, because Coca-Cola has their own manufacturing, I think, with a new subsidiary.
They
And
have a bottling partner, but it's a private company, so it's not
yeah,
going to be a listed competition.
no, I'm saying in terms of, let's say tomorrow Pepsi wakes up and decides to throw a fit and say 12 months I'm leaving. There's nowhere else for them so soon.
Yeah, that is true. In India, there's no one. Yeah.
Importing would not make sense. But
Right.
talk about all that energy and energy drinks. If we look at the energy sector in India, uh, one company that comes to mind, I think, that we could discuss next week is NTPC. It has a bit of regulatory hurdles with their capped ROE per project, but it has given good quarterly.
Hey, hello, one sec. I said I think there are issues like that. Don't.
No. I know that. I read
Okay.
upon that. Yeah.
Okay. Cool.
So that, but it has been giving good quarterly results, of course, and summer is coming, so energy consumption will, of course, go up due to cooling requirements for those Invisi-coolers by VBL. So
Yeah.
maybe we can discuss that and study about NTPC for next week.
Let's do it.
Yeah, interesting topic. I think both of them are summer related, right? More people
Yeah.
consume cold beverages and more people consume power as well.
Right.
Exactly.
Yep.
So much connected content. It's such a good podcast.
We could do like
We could have done Devyani also next week. Not done, but as a stock.
Too many eyes. Space it out.
Ooh.
Yeah.
hold off on that one for some time. I still like
Yeah,
Jubilant,
we'll keep our hands off.
but okay.
You like Jubilant better?
Yeah, then Devyani.
We were fighting, not exactly. We were searching which one to do for the next
No,
season.
but we could do like this thing, right? Jubilant, Hardcastle, and Devyani.
Oh, food F&B you want to do that.
Yeah.
That'll be a nice one. Yeah.
Out of research, that will be.
That's
I wish.
3 companies in one eye.
Exactly. Nice one. You are saying smiling food.
So 1-1 picks up 1-1, no? Like Ayush takes Devyani, Yash takes Jubilant, Hardik takes Hardcastle.
Let's
So
do it.
Hardcastle is what? McDonald's and all of that.
McDonald's.
But some company does some company has split it between 2 companies, right? In like one does north and west, and one does south.
McDonald's.
Yeah.
So they also had like a little bit of a tiff. I'm not sure of the details, I think, but it's a spicy one.
Yeah.
It's a saucy one. Where Hardcastle said like they started arm twisting McDonald's, and McDonald's had to give in or something like that. There's a
Wow.
nice story to it. It's worth covering at some point.
See, we have so much foresight. We thought of the next topic.
That's guys.
So that's a wrap.
Bringing new